So a lot of people think you have to put 20% down to buy a home. And I know this has been going around for years and years and years. So I'm here with Mary Cables, one of our senior loan officers here at Morgan Financials and one of the top loan officers in the Brevard County area. And we're here to discuss these myths, why they're not true. And at the end, we're going to give you a good understanding of some other options that allow for a very low down payment. So we're talking about down payments, right? And there's this big myth that there's a certain type of loan out there that is for first-time home buyers. Do you know what type of loan people think is only for first-time home buyers?
FHA.
Right. First-time home buyer.
Yeah.
Right. So all joking aside, what does FHA stand for?
Federal Housing Administration.
So it doesn't stand for first-time home buyer.
It does not.
Okay, cool. So a lot of people think for FHA is made for, it is a great first-time home buyer loan. I'm not saying it's not, but there are other options out there that we're going to talk about today. What's another option that's out there?
There is, depending on, how much they want to put down, there are different products through conventional, putting as minimum as 3% down.
But you have to put 20% down, right?
You do not.
No.
No.
Wow. Okay, so what is the minimum requirement on a conventional conforming, what's known as a Fannie Mae or a Freddie Mac loan? What's the minimum down payment requirement?
3%.
3%, not 20.
Not 20.
That's good. So this is crazy because as an industry, we talk about this all the time. The biggest barrier to buying a home is the down payment, right?
Yeah.
And there's still a lot of people, smart people that think the minimum, like you have to put 20, I can't buy a home. I can't afford it. I don't have 20%, right?
Yes.
They might have good credit, good income, and they have money in the bank and maybe even have a 401k and assets, but I can't afford it. So, this has been going on for years. So what have you seen out there? Have you had clients? I mean, what do your clients typically come to you? How do they come to you, I should say?
I have seen from every end of the spectrum, but I would say I will typically get a lot of I have to put 20% down. I just recently had a client come that he thought he had to go FHA and was actually pre-approved with a lender because he wanted to put the minimum down. And he was very well qualified for the 3% down conventional, and he's actually putting in an offer today.
Yes. So. Very good. And so they came, their thought was, look, I'm first time, I got to do FHA.
Yes.
Right. And I know there's a difference between FHA and conventional, but what are some of the main differences between the two types of loans? Or in your mind, what's the biggest difference?
I would say the biggest difference, if you put 3.5% down on an FHA loan, you have PMI for the life of the loan, typically, where 3% down conventional, at 78% loan to value, it would automatically fall off if you make all your payments on time. So.
Okay. And if the house appreciates in conventional loan, you can petition with the lender to take it off if there's equity in there, and there's ways to get rid of your MI. We're on an FHA loan, so sorry, you're going to have to pay that mortgage insurance. By the way, what value to the borrower does mortgage insurance give?
Value to the borrower, it allows them to get a loan if they're putting less than 20% down.
So yeah, on a less than 20% down, that the borrower pays the MI, but all it does is give them the ability to put less than 20% down. Right?
Exactly.
Unless they're doing a VA loan, which they don't have mortgage insurance.
Correct.
Right. Cool. So that borrower has the but what's crazy is that, there's actually, I watched some of these YouTube videos and a lot of them, and some podcasts I listen to, and they're actually telling people to not buy a home. And this drives me absolutely batty. And I promise I'll get to a point on this. It drives me absolutely batty because the number one determinant of wealth in our country is what?
It's through home ownership.
Home ownership,
yeah.
Right? And they're talking to people that, like, by owning a home, even if putting 3% down, every month, part of your payment goes to principal, right? Every single month. And you're saving money, whereas if you rent a house, even if your rent and your mortgage payment is the same, that part of your mortgage, 100% of your rent goes away. I mean, it goes to your landlord who pays their mortgage with it. Whereas your mortgage payment, every single month, a part of that payment goes towards the equity on your home. And that's why people that own homes tend to have more, and not even getting into appreciation, the home value going up, that's just icing on the cake. But if you own your home for 10, 15, 20 years, you're going to build equity in it, right?
Exactly.
Right.
And then with rent, you're building someone else's equity.
Yeah. So what's the maximum if I want to put 3% down, okay, and I'm buying a home, first time home buyer, I'm putting 3% down. What's the maximum loan amount I can do?
Well, come January 1st, the new conforming loan limits have gone up to $766,550. So if
Wow.
you're getting a conventional loan, that would be the max.
Yeah. And FHA, I have it here. It's a really odd number. It's 498,257.
That's not odd, Joe. That's a very round number.
It's actually odd. It ends in a 7. I know this because I had to relearn math with all my kids. So, although I knew that
Good
was,
job.
Yeah, thank you. So FHA, obviously it has lower loan amounts, and it's crazy because we're seeing first-time home buyers in this market buy $800,000 houses, $600,000 to $800,000 houses. Typically, we're seeing the average age of a first-time home buyer is actually like 35, 36 now, where 15 years ago, it was like 30 years old. So the average age of a first-time home buyer has actually increased.
Well, what qualifies you as a first-time home buyer, Joe?
Oh, you're trying to stump me, aren't you? So in order to be qualified as a first-time home buyer, you cannot have had ownership to a property in the last 3 years. So if you haven't owned a home or been on title to a property in 3 years, you're actually considered a first-time home buyer, even if you've owned a home in the past outside of that 3 years. So that gives you more options.
Yes, it does.
All right. So there's on that 3% down, are there different types of 3% down loans?
There are. Yes, there are first-time home buyer 3% down home loans, and then there are ones that you don't have to necessarily be a first-time home buyer.
Okay, so the 3% down is available to everybody, right? But the 3% down, I think they call them different names depending on where you get them. Home Style, Home Plus, Home. There's a bunch of Home Possible, a bunch of brand names for them, we'll call it. But they have some better qualifying or better. What's the deal with them?
So if you are a first-time home buyer, so the one that put in an offer today who is a first-time home buyer, putting 3% down, he actually got a better interest rate because of the area gross income.
Okay. You have to fit with a certain income bracket.
Exactly.
And you have to be a first-time home buyer?
Yes.
Okay. Is it area specific or that doesn't count for those types of loans?
It is area specific.
I don't.
For the gross income? Is that what you're...
Oh, that is area specific on the
okay.
income. But it doesn't have to be in a specific low to moderate area
No,
income.
I'm
Okay.
sorry.
Gotcha. So the income requirements are specific to the area.
Yes.
But not the area
I thought you were
itself.
trying to stump me.
Oh, there we go. That comes full circle. Cool. So how do you get rid of a mortgage insurance on an FHA loan?
When you now I'm like, are we talking about 3.5% down? Because that would be life of the loan.
Right.
So
I was messing with you. So yeah. But there is on FHA, if you put 10% down and after 11 years, you can get rid of mortgage insurance.
if you make all your payments on time, yeah.
Okay, cool. Any advice you'd give to first-time home buyers out there looking to buy a home?
Absolutely. If you are a first-time home buyer looking to buy a home, talk to a lender, preferably here at Morgan Financial. Preferably here at Morgan Financial, and get all the facts. Understand the difference between all the different loan products that you have, so that you can make the best decision for yourself. Don't just ask around to friends. A lot of times they'll tell you have to put 20% down. So speaking with a local lender that can give you that advice is what I would advise you.
Yeah, I hear it all the time. So my brother told me, I'm like, is your brother a licensed mortgage loan originator? No,
but my uncle who lives in Hawaii, he knows somebody who is.
Yeah, we get it from the horse's mouth. That's probably the wrong. I'm the horse. But get it from a professional that knows what they're talking about. We'd love it for it to be us that you call, but make sure you talk to a professional and get the right advice. And look at your options and say, which one is best for me? How long am I going to be in that home? What payment am I comfortable with? Is this loan going to be a long-term, short-term? Is this house going to be, are we going to outgrow it? And you can structure your loan differently. Not every loan is created equally, and especially the way it's put together. And we've said this a million times. A good loan officer, a good company can make a hard loan easy, and a bad company can make an easy loan hard. Yes. And they can make the wrong loan right for you or the right loan wrong for you by just putting it together the wrong way. So make sure you talk to a professional. Any other parting words on this one?
No, I think we covered the majority of it.
Okay, cool.
Any parting words from you, Mr.
Yeah,
Harris?
thank you. I was just going to say, look, you don't have to put 20% down on the loan. If you're a veteran, 100% financing, no maximum loan amount as long as you qualify and you're eligible. If you're looking for a conventional loan, you can put 3% down. FHA's 3.5% down. They come with different parameters. One might be right for you and one might not be right for you. So make sure you work with a professional that can help you get the right information to make the right decision for you. And with that, if you know anyone who might benefit from this information, please share it. But before you do, like it, subscribe, call Mary or another loan officer here at Morgan Financial. And with that, I will see you next time.